All right, so we were looking at 2, 2. Did you see that bracket happen when we were doing it? Well, what happened is if you think about this 2, 2 as this bracket right here, you had this nice little slow, calm bracket that just got set in. All right, we'll call this the 2 print, and then this was the 2 print. But what happened when you did that is you only had in this 10-point bracket, all right, you had an established range, which this was the high, this was the low. All right. So think about this as a box. And what happened is on this box, you had somebody that got a little brave and just went out of the box by 1 tick, and that's the Fisher, or I call it a phantom print. I mean, it's a real print, but it's not a print that you actually want. You're hoping to God you didn't get filled on it. And then as soon as that happens, what happened next? You had whoosh. Well, a little pin thing's messing up on me again. Hold on just a second. Exit. Let me see if the GoToWebinar one will do it more. All right, so you had this happen. Oh, here you go. Then you had a phantom print, and then pow. Okay, I know what it is. My pencil's jacked up here. Hold on, let me get this thing set. Well, does that make sense? I'm having a problem with the pen. So do you wait until you see at least 3 orders at that level before you believe it? I mean, if you see 1 to 5 orders up there, they're definitely suspect. I would think twice about doing them. Ideally, as soon as you see 1 order up there, you would fade that order. So that order happened right in here. Okay, that order happened right in here. All right. So on these 2 candlesticks right here. Now, what has it done ever since it's done that? Put that order in. It's sold off. Yeah, phantom pin. I don't know why thing's not working. It's kind of weird. You try one more time. It's easier to draw on the videos at night. Like this thing when it's live, it's got a little mind of its own. Let me see if I can. I don't know why it won't stay. There you go. Weird. All right. So let's do one more. You guys ready? All right. So you're going to start your 10-point bracket. Okay. So great, Helen, great question. Trying to understand what makes it a signal. Like, how do you know it won't continue to increase in price? Helen, you don't. You don't know that. You really never know anything about the markets. The best way I can explain to you what trading is really about is you've got all this overwhelming information coming at you, and you never really have a perfect picture of what's going on. So you're making the best informed decision you can out of incomplete information, okay? But the reason I have seen that numerous times happen before, so I had some experience going, look, those 2 prints there are not really a good thing. All right. So if it would have been a bad thing, or it would have been a good thing for a short, and you shorted it, you'd have made money. Now, if you would have shorted it and it would have continued going on, you would have lost anywhere from 5 to 10 ticks. That's just what stops you for. Yeah. It's just experience. There's time. The more that you just stare at good old price action, these trades will just jump out at you over time, and you'll be like, oh, this is a decent setup. Well, how do you know? Well, I've seen it 100 times. It usually works like this. Is there an unspoken rule that everyone is making 10-point brackets such that the occurrence of the plus or minus causes the reversal? No, not really. I don't really buy into the I personally don't buy into the everybody's doing the 10-tick thing, because I think I'm the only one that teaches it. I think everybody's got their own agenda, and everybody's just trading the best they can against themselves and everybody else. The self-fulfilling prophecy thing, I'm not really a huge fan of, especially on stuff like this, because it's more random than anything. Can you show your settings on the ESI and X again? My bars are huge because the range is less than yours. All right, so how you fix that is you go up here in the trade station and you turn on background dragging, and then you can just go like this right here, like that. Is that what you're doing? You just shrink it down, and then you can drop it, and then click Disable and Maintain Current Scale. Click that, and then I'll lock it in for you. It's called background dragging on TradeStation. All right, let's do another bracket. All right. Start your bracket at 60. All right. And right now it's at 62. So you're 02, 03. Does everybody understand how to get a bracket first? Because it usually confuses a few people. 03, 03, 03, 03, 03. Hey, Angie tried to call me. Call her and see what she wanted. 03, 03. 03. 04s. 04s. Which way is it going, up or down? Without looking at the chart. We're going to do this drill one more time, and then we're going to get into doing it without charts. Nine three. 9-3. Merrill bond, little paper bond, not much, just a little paper bond. 3-7. 3-7. So you always judge the direction by the speed of the price. It's one of the inputs that you look at. You look at tempo, speed, pace, and what's going on in the pit. Tempo, speed, pace, and what's going on in the pit. 3-7. Are we at 3-7? I can't look at the tape constantly without looking at your all's questions. So if I get lost, somebody bring me back on track here. Are we at 3-7, 4-7, 5-7, 5-7? I think what we're at, 5-7 from memory. Is it 5-7? I can double check with the candle. Yeah, I'm right, 5-7. All right. So one more time, let's start and do a bracket, and then we're going to talk about, are you a trend trader, are you a counter trend trader, and then we're going to tell you how to trade that according to what you are. So we're going to start at 6-0, 0, you're at 0, 1, 2, 02, 02, 02, 02, 02, 02, 03, 04, silence in the pit, 04, 04, 04, 04, oh, rolling over, 5-9's waterfall, 5-9 waterfall. Probably going to go a little lower. See if it happens. 04, 04, here comes 60s. 60s, next thing's going to be a rollover. 06, 04, 04, 04. If it pushes, it's going to be a little violent. 04. 8-4, 7-4. Little mini waterfall at 6, 4, 5, 4. Lower, 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 lower. Pit noise is increasing. You got your 10-point bracket. On this one, you would continue lower. 04s. Within a bucket of low, probably going to go lower. So right now, you'd short 57, short 58, and then see if it would continue to roll back over. So a little bit different. So did you see the little mini waterfall when I said, hey, heads up, it's probably going to do this, and then it's going to do that, and then it's going to be a little violent to the downside. So did you see the little flash of red when I was talking about it? Yes. All right. So that is a mini waterfall, and usually waterfalls precede a fall, okay? So if you see price action that's a little herky-jerky, it'll go like this. Will be a little herky-jerky, and then it'll go whoosh, and it's all red. Well, that's just they're pecking at the low, and then whoosh, some orders break that. It's a little mini waterfall, and then it falls off the cliff like it's about to do right now. And usually you can have 3 to 5 mini waterfalls, and then the selling will pick up. Then it'll come to a crescendo, and then, boom, it'll stop on a dime, and then it'll start to retrace back up, and then it'll roll back over. Does it make sense? There is you do have to have some bit of feel for what the market's doing, what it's trying to tell you, and what it's trying to do, all right? So in this situation, it's kind of like being in a marriage. You don't really get it. I mean, you don't get to impose your will on the market. You basically have to be very, very submissive to the market, all right? Same thing. It's like a give and take, like being married, right? In this situation, if you have an argument with the market, it will rip your head off. It's not like, you're going to be slipping on the couch or anything. It's going to hurt your account. So in this, what you want to do is you want to subordinate your will to the will of the market with the price action and let it lead you around like a little dog on a leash. And by you being submissive, you will make tons of cash, more money, and build your net worth, all right? So it's like being married then. It's funny. Is this information helping or hurting you? Here we go lower. Look, mini waterfall at 46. Mini waterfall at 46. It's going to pop up 48, 49, potentially all the way up to 53. And then it's going to roll back over again. And it's going to push harder. And you're going to see waterfall, waterfall, push, push, push. What it's good for, it's really good for laser target entries and exits. All right, it's gonna shave some entry and exit points off for you. It's mainly used for scalping, but you can also use it for like getting in and out of trades too, on setups or longer term stuff. Pit noise, lower, waterfall, 44, 44, 44, 44. Good pit noise, probably going to be good follow through. We're getting ready to take out the low. We're going to retrace potentially up to 53-ish and then try another push. Now, I'm also using this service. All right, so let's bring another component in.
80 Monopoly here now, 770 the Dopper Daddy. We are on bulls here at 80 at 70. We've got a 70 offer, 7.5 offer. Looking for a 7.5 print. There it is, folks. We just traded new lows here. Locals coming in on offer right here. Aggressive a bit right here. 7.5 trading it now. After at 80.
All right. So this service is
looking for a print below 7.5. There it is. 30's traded here once.
So this service is Traders Audio. The guy that's talking to me there is Alan. Usually it's Ben. Ben's off today. He's spending the day at the house. He gives me information of what's going on in the big S&P pit. Now, you're probably going, that's retarded, Hubert. You want information from the big S&P pit, but you're trading the Dow Minis, which is electronic. How in the hell does that help you? Well, the big S&P pit, although the volume is decreasing and most of the volume is traded on the E-minis, big institutions can still nudge around things, all right? So how it works is, picture in your mind, there's this big warehouse, this big room. And there's all these traders that are on this pit. And there's steps that go down into this little pit, okay? The top step are locals. And then every step lower, you go down the food chain, okay? So you've got the top 10, you've got the top locals are on the top step. And then you've also got paper with those institutions like Merrill, Bear Stearns, which is no longer around, Shy Corp, Goldman Sachs, all the big institutionals. They're what's considered paper. And then the pit traders that are backed either by other people or trade their own funds are called locals. And their pockets aren't as deep, all right? So on that situation, you are either front-running paper or you're riding the coattail of paper, and it's better if you get in front of it. So if we look around and we say, okay, in the S&P, let's say the price was $12.54, and a big institution said they wanted to sell 200 lots at $12.54, you could see that right before it got to the pit, all right? So they'll try to jump in front of that and make a few ticks before that order gets filled. Now, paper to paper trades don't usually happen. It's usually paper to locals, And if you have local trade, it's just slop and chop, and you want to stay away from it. So for me, listening to the information of what's going on into the game in the pit, I can kind of figure out what may potentially happen and nudge the E-minis in a direction. Now, used to, when the pits were separate, when the S&P when the Dow and the S&P were in separate buildings, when the Dow minis originally came out, I had anywhere from an 8 to 12 tick difference. Now, that got arbed fairly quickly, and it went down to where I then had a 3 to 5 point difference. Now there's not a whole lot of difference at all, but I can still pretty much figure out the direction that it's trying to go based upon what the locals are trying to do, what the paper's trying to do. So when I see a sell-off in the minis, if it's preceded by loud pit noise, or if loud pit noise is first, I can kind of tell you if it's going to continue, if it's going to stop, or we're going to go sideways here. So it does give me a lot of information that I can then use to make more money as I'm competing against everybody else. All right, so we're getting ready to go low again here. So get your bracket. Your bracket's going to start at 46, 44, 44, 6, 4, 6, 4, 6, 4, 6, 4, 6, 4, 6, 4. So Gary's asked me about a gold rush trade. Let me see it really quick here. Yeah, gold rush. I'm going to go ahead and throw the gold rush on here. I've got it set, so if it gets filled, Gary, I'm good to go. All right, 6-4. Where are we at? I'm going to have to cheat. 51. 4-1, 4-1, 4-1. I had to go over there, so I had to. 4-1, 4-1, 4-1. Is that 54, 51? Hold on. Yeah, 44, 51. So if we get 54, then that'll be the bracket. So after you keep doing this for, I don't know, several months. I mean, when I originally started doing this, how I got started with this, the guy that taught me how to trade, his name was David. I would come in and I would sit next to him, and he would have two 21-inch CRT tubes were like heaters. What he would do is he'd be looking at 400 different equities, and he would have the bid, ask, and last, and the net on those equities. And the screen would be flashing, and he would be going, all right, he would give me 3,000 shares of, 3Com or Palm or whatever, or Clack, or, give me 8,000 lots of Intel or 8,000 shares of Intel. Give me, 5,000 shares of Juniper or whatever we were trading, equities at the time. I never really knew why he was picking what he was picking until one day he started talking with his hands, and his hands would move up and down. And I'd be like, dude, how are you picking out of all these 400 equities? How do you know we're trading those four today? He's like, well, based upon our research that we would do. And I understood the research that we were doing. It was basically we were looking for stuff that was making new highs, new lows, and taking volume at the close. That's easy. You can run a report and find that out. And then from there, we would either load up the boat, and we'd come in the morning, we'd either be up 800,000 or down 200,000. It's just swings. We had real big swings. And then he started talking with his hands, and he'd say, like, all right, you see this one out here? What it's doing is it's going up like this, and then it's stopping, and then it's coming back. And I'm like, dude, you're just printing a chart in your head is all you're doing, right? He's like, yeah, I guess. He's like, but I can actually see in the price action on the bid, ask, last, and net, and the time and sales on how aggressive that buying and selling is actually on that equity. And it took me probably 6 months to get the basics down because we were just looking at price action. Bid, ask, last, and net. And that's how you learn how to trade just price action. And then I started putting patterns together that he would teach me, like you see this? Okay, when that happens, this is probably going to happen next. Now you see this and this is probably going to happen. And that's kind of what I'm passing on to you guys. And I did like an old school apprenticeship with that guy for probably, I don't know, almost 2 years before I placed a trade in my own account. So it's really valuable information. Anytime I start going through a drawdown or losing money, I always fall back to good old price action and tape reading and order flow. Just because I know I can fall back on it, that's how I evolved as a trader, I know I can always make money that way, and I'll just go back to it. All right. So let's get back to the story of the question of, are you a swing trader? Are you a trend trader or a counter trend trader? If you're a trend trader, you got to ask yourself, are you going to buy pullbacks or are you going to buy breakouts? My preferred methodology is I am a trend trader that buys pullbacks. All right. So if you're a counter trend trader, you're almost always going to be fading stuff, which is fine. So if you've got that 10-point bracket, then you're going to fade the top and buy the bottom, or buy the bottom and fade the top. If you're a trend trader and this is your bracket, then what you're going to do is you're going to let your price action go like this. You're going to go, this is the bottom of your bracket, this is the top of your bracket. So if you're a counter trend trader, you're going to short this and buy this. If you're a trend trader and you buy breakouts, what you're going to do is you're going to, when this breaks out, you're going to buy at this area. Now, if you're a trend trader that buys pullbacks, you're going to let this thing run up, break out, pull back, and then you're going to buy this situation. That's all within the confines of your bracket that you establish by being a 10-point bracket and going, okay, here's my bracket, here's the price action, here's what I'm trying to manipulate in order to jump into that trade in order to successfully extract some funds with. In other words, some cash flow. All right. So let's go to a different sheet here. I'm just going to take this with us. We're going to right click. We're going to go copy. We're going to go paste. All right. Now that's going to be one thing. We're going to come over and get another one. Right click. Copy. So this is the drill I would like to see you do at least 30 to 60 minutes a day, okay? This will help you out a lot. Well, first I want you to have a chart up, and then you're going to cut it loose too. All right, so here's your chart. So I'm going to teach you how to gradually wean yourself off of charts. If you want to, I think the best way to do it is just to man up and just kill them. Just go cold turkey. But I'm borderline crazy on half the shit I do, so I can't really recommend it to everybody. I'm a little loopy from time to time, so what may work for me may not work for you, and you might be going, dude, you're crazy. I can't do that. That will never work. So here's how I'd like you to set up your workstation, to where you have the price action set up with time and sales, and then the tick, and you can right-click this one. You go here. We got an order fill on gold. It's probably breaking down lower as we go lower. All right, so first thing, get your bracket. If you get lost, you can use the chart. But ideally, what I'm going to get you used to is just using the time and sales with a tick chart. And then after you get used to that, you'll kind of get used to like, oh, here comes the pop-up. Oh, here comes the rollover. And then you can get rid of the tick chart too. So let's do one more chart. All right. Not one more chart, but one more bracket. 2 4 2 4 4 4 4 4. One bracket. Bracket 2 4 2 5 2 5. Bracket 2 5. 2 5. Bracket 2 5. Bracket is 2 5 2 5. Probably gonna pop up a little bit more here on 2 5. See the little pop up here 2 5. Usually a decent signal that it wants to go through 5 because you had a lot of green on 2 5. See, there's 2 6s. Now you try to time when it's going to be. So now you got 2 6, 2 6, 2 7s, 2 8s, 2 8s. So that was a waterfall in the positive direction. 2 9. Did everybody see that? How do you establish the bracket? You just look at the price action. We're at 2 9, 2 9. 2 9, 2 9, 2 9. Obviously, the overall price action, if you want to cheat, is going to be lower, right? There's 2-0, 2-0. So you could start to fade threes right now. You could start to trade 12,530. You could try to short that, in other words. Your bracket is 2, so it's going to have to be 32. You can go with an 8-point bracket in this case. You already know the overall direction from trading the action today, right? Right now, when we start our bracket, it's going up, okay? But overall, the market dynamics are lower. So on that 10-point bracket, we go, all right, there's 3, 2, 3, 2, 1. 2-0, 2-1. And then now if we get a 2, we have to decide when we're shorting this. If now we've got our bracket established, are we a trend trader, counter trend trader? Are we a trend trader that buys pullbacks? Or are we a trend trader that buys breakouts? If you're a breakout trader, it's going to have to break 2 again for you, right? But I think the play is short the 2s already. You short the 3 even, the 12, 5, 3, 0, and probably be okay. Pitt's slowing down a lot, not a whole lot of action going on. There's your 2 4s. There's your 2 4s, 2 4s, 2 4s, 2 6s. So if you shorted at 3-0 and 2-4, you've already got a few ticks. Now here's the difference. We own our own clearing firm, not our clearing firm, but we own our own brokerage firm, an IB, an introducing brokerage relationship that we can take around and shop for the best rates. The cool thing about that is I only have to make 1 tick on the Dow to make any money. Okay? If I make 1 tick on the Dow, 1 tick, I've made money. Now, can retail traders say that? If you're paying a $5 commission and 1 tick on the Dow is worth $5, you just broke even. You don't really make any money. The difference is I can make money on 1 tick and make, pretty close to $3 to $4, all right, on that first tick, just on a, in and out. So commissions are important, okay? So here's our 3 2s. So here's another short at 3-2. Now, did you see the mini waterfall at 2-9? You had 3-2, and it hung there for a while, and then it said, whoosh, 2-9. All right, now it's back to 3-2. Now you're doing a flash at 3-2, 3-2, 3-2, 30, 3-2, 30, 30. So what it's trying to do is it's trying to figure out if it wants to go higher, okay? It's a coin toss at this point, but you've got the overall pressure going lower, so you got a decent shot of shorting at 3-1, 3-2, 3-4, all the way up to about, say, 3-6. If it gets up higher than that, then we got to reevaluate. All right, so now what we're going to do is we're going to do this. We're going to go, dun, 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 dun. Now we're done. No chart, right? So now with the chart, now what we're going to do is I'm going to move this one over here. See if you can figure out the relationship between the price action and the tick chart. They're hand in hand. They go hand in hand together. So now you're at 2-7. So now start again. Now you have no chart. So you're at 2-7, 2-6, 2-5, 2-8. So I got lost. I got to start again. 2-7. Think I'm 5. There we go. 5-9. I'm on 5-9, 5-9, 5-9, 5-9. 5-9. 25 by 29. 26, we're going lower. 5-9, 5-9. So is this easier or harder than trading with charts? When you originally started, it's kind of a pain in the ass. But once you get used to it, it then makes it a little easier. Still 5-9. 5-9. 5-9. Notice the tick. Watch. 5-9. 5-9. It's going to go a little higher, right? It's going to go a little higher. 5-9. 5-1. 5-2s. Okay, now that's potentially it right there at the 3-2s. Potential it. All right, so 3-2, 3-2, 3-3, 3-4, 3-5. All right, so we're 5-5. We got a bracket. So I want to short this bracket. So I would short anything up in this area around 12,535 all the way up to 12,003 or 12,540. All right, so I would short it from 35 up to 40. All right, now, am I going to be correct? Probably, because see the hook means it's running out of gas. Okay? Da-da-da-da. And correct. And now if you cover, you make 2 points. You make 3 points. You made money on all of them. Now you put your stop close to break even, and then you just let it run and see if it pays you more. Now you're looking for an increase. What you want to see now is you want to see this thing drop off of a cliff, flash, waterfall, flash, waterfall, waterfall, flash is what you'd like to see. If you see either a flash of red or a waterfall of red, then you know it's going to drop like a stone, and probably around the minus 800 area would be your cover area. All right, let's do one more. You guys ready? Start your bracket at 3-5. 5-7, 5-8. It's probably going to go higher. The 8s act pretty good. 8s act good. 5-8. There's 5-9. The 9s are a little slow. They act like they're running out of gas. There's 3-7. 5-9. Did you see the flash? Did you see the waterfall at 37? Usually precedes a fall. Waterfall precedes a drop. Five nine, 5-9, 4-9, 3-9. 3s look good for lower. 3s look good for lower. All right, we're still at 3-9. Oh, you see 3s, 4s, and 5s? That's not good. That's not good at all. No. That's bad juju. We're starting to slow down, though. It's 11 o'clock. The indexes usually start getting slow around 11:30, so they're starting to slow down a lot. There we go. And we have our 10-point bracket. It's going lower. If you're a breakout trader, short this. Hopefully you short from a little bit higher, but now you start gauging where's it going to go, where's it going to stop at. Okay. Now, if that's your bracket and you're not short, and you didn't short the breakout or the pop-up, now what you want to do is you want to see it retrace up to, say, 29 probably, and then you would short it at 29. 4, 5, 6, 7, 8. You can even do 8. You can do 28. 28 probably work. So here comes your pop. 26, 27, 28. So you could short 28s here. It's probably going to go a tad higher, but you could short 28s. Probably get a fill at 27. So let's say you were in at 27. And then you're looking forward to float gently lower and then pick up speed. It's going to work. All right, so any questions on this so far? I want to take a recess here for 10 minutes. We've been going at this for 2 hours. I never like to work on anything more than 90 minutes before I take a 10-minute break. So questions before I take a break? You guys are easy, no questions. Oh, here they come. For a gold rush trade, is there a 3-point stop and a 6-point target? For intraday, it's a 3-point stop and a 30-point target. Oh, can you see me do a trade with tape? Oh, most definitely. Here. Let's get let me get execution over here. I'll just copy trade station window. Let me change it to trade station here. We don't have to reconfigure anything. Right click, copy window, workspace, right click, Case window. Okay. All right, so let's do one. I'll do one with you live. So I'm gonna make you guys do some of the work, okay? Timing sells for all markets except what market? Currencies, or I should say spot forex market. Currencies have it, but the spot forex market doesn't have it. All right, so I'm gonna make you guys do the work on this because I already know how to do this. I've been doing it for 18 or 20 years. This tactic. So what I'm going to do is I'm going to let you guys decide first the direction, the speed and the tempo. You're going to help me on the bracket, and then you're going to tell me where to either short it or go long it, okay? So you help me do the research and the work on this trade. I'll execute the trade. All right? So first, start me out at a bracket at 26. First, what type of trader are you going to be? Are you going to be a trend trader or a counter trend trader? Everybody give me what you're going for here, and I'll tell you how to employ the tactic. Trend trader. Are you going to buy a breakout or a pullback? Pullback. All right. So you're wired the same way I am, most of you, or it's what you're saying here. All right. So start the bracket at 25, 25, 1, 5, 1, 5. Obviously, a little hint, it's going lower. 1, 5, 1, 5, 1, 5. 1, 5, 1, 5, 0, 5, 0, 5, 0, 5. Okay, there's 0, 5. It's going lower, right? Yes, no, maybe? 0, 5, 0, 5. Yes, sorry. Now remember, minus 1,000 is an extreme. There you go. You're pretty much already there. You're 7, 5, 7, 5. 2 more and you got your 10 ticks. So now what you want to see is you want to see a pop-up. When it pops up, short it. Just scream out short. Let me see how many stop and target. That's not good there. We only want to use about a 15-tick stop, and we'll use a 40-point target. All right, we're using a 15-tick stop loss. So it's short. There's a dropping like a stone. Dropping like a stone. There's your 5. On the bounce. On the bounce. Type in S for short. Now look, it's going to bounce. It's at a minus 1,000 reading. It's going to bounce. It's at minus 1,000. It's going to bounce. 15. So you want to short it anywhere like 18, 19, anywhere from 18 to 23. I'm ready when you are. Short. You're saying short right now? I have to have at least 5 people that tell me short. Right now I have 1. There's 2. There's 3. Come on, don't. There's 4. We need 1 more. 1 more order. 1 more. 1 more. And short. Wait for more. Wait. All right. All right. So I got enough votes. So there's enough votes. All right. We're risking 15 ticks, and our target is we're just trying to go for anywhere from 5 to 10 ticks. Now it's a reverse thing here, but I'm just trying to show you the execution of it. Okay. Obviously, if it drops, if it breaks out this low, we'll keep it to see if it'll make a more substantial low. So let's see if you guys have figured it out. On this, I will let you know when I'm personally doing this. I'm usually right probably 40 to 45% of the time on this stuff. The losses are anywhere from 5 ticks to 15 ticks. I usually trade multiples, and as soon as I'm up 5 ticks in it, I go ahead and get out a half. So in other words, I take little dings, but I also go for that last quarter that gets a run. Okay? Does that make sense? So I don't want you to think that this is going to be right 100% of the time. I'm only right on this about 35 to 45% on this over the long haul. But I take lots of little losses on this stuff And then when I'm trading multiples, I scale out a half, out a quarter, and then I have that last quarter, and then it runs for me, and then that wipes out all those small losses. So now, you guys tell me when you want me to cover. We'll use the 15-point stop losses because that's fine. That's just good enough for a fudge factor to see if you guys have learned anything here. And you may get it correct, and you may just, get it wrong. It's not a big deal. What I want you to do is tell me when you think we should, if we do get into the profit, just type in C for cover, all right? Because part of this scalping strategy and the tape reading and order flow is trying to figure out like, oh, it's going lower. Okay, it stopped. We need to get out. Okay, it's they're pouring the gas onto it, so stay, and then get out. Swiss Bank paper sellers in the pit. Swissy selling. When move stop to break even. You know what? You got to give the Dow at least 10 points just a wiggle room. So until you're up, I would say 25, maybe 30 points. I wouldn't move it down to break even. So you've got another paper seller. We've got Shycorp. Best time to do this is from 9:30 to about 11:30. Then it starts slowing down. You want to use this tactic the best when you have thick market environments, when most of the volume's coming in, which is usually the first hour and a half. So now notice what's happening here. Look, the ticks just went positive. Did the price action react? It didn't react very well, right? I mean, it's pushing positive, but there's not a whole lot of price action over here at 25s. So in other words, as soon as this tick stops, you should start to see a little bit of negative price action here in time and sales, and then it should float lower. Now it's starting to come in, 27, 28. Now it's getting a little bit more active. All right, so you got stopped out. So now you got 2 minutes, and you reestablish. You start your bracket again. So you wait 2 minutes, and then you do the bracket again.